We had Franklin Templeton come in, one of the largest fund managers in the US, come in, want to participate. We said, okay, we'll do it at 25 cents. So we're not beholden to do a financing anytime soon, and we're cashed up and can continue to explore, luckily. We want to do this methodically, and with the cash budget that we have, try to build as many ounces as we possibly can. I think one important thing too, as you can see on this map, is that the high grades aren't concentrated in one area necessarily. They are peppered throughout the resource district.
All right, today we're going to chat with John Sclodnick, president of Nevada King Gold. John, great to have you on the show. Welcome. Perhaps we can start off with an overview from your side of what Nevada King Gold's all about. And it would be great if you could squeeze in a bit about yourself as well and what you do for the company.
Yeah, absolutely. So I was an equity analyst covering gold and precious metals, from exploration through to production and some large caps. But I was attracted to the story, and first I saw a drill intercept. It's 11.6 grams per ton over 108 meters, just an absolutely phenomenal intercept. It turned out to be the best drilled in Nevada in 2023. So this came across my screen, and I looked into the company a little bit and saw, it wasn't covered and looked very attractive. It was a simple story in that it's high grade oxide in Nevada. So looking at this from kind of the equity research lens, bring it to the investment bankers. They see an opportunity given the kind of potential for this and the lack of coverage, and I think it still is a very under the radar name. Same with the sales desk, a very sellable name for them. Great jurisdiction, and the high-grade oxide nature makes the processing simple and relatively straightforward story there. So that's my background. Spent over 10 years in equity research. This became my top pick, and I'll get into why. The story really kind of broke open. So previously was viewed as, okay, you got 600,000 ounces, but can this grow? Previously, there was questions about the metallurgy. The phase one came out and that was de-risked. And then what really changed for me was some of these discoveries made last summer where, their gold was found in new types of rocks, and it really broke open the exploration potential in the 120 kilometer land package here. So that's kind of the gist of the story. We've really tried to simplify it here. One project in one company in a great jurisdiction with a lot of grade and a lot of growth. And then the other differentiating factor I'd mention, which I've never seen in all my time covering companies and equity research, is the alignment with management, and that starts with Colin Cattell with his position as a founder of the company. He's got over 20% ownership, and that's not through founders' shares, that is through financing, and he's been on the lead order for most of the financings. So just a very well-aligned management team, and just see the potential for this resource to continue to grow.
So many threads we need to pull there, but let's start with the basics. You, of course, referenced there an oxide resource, oxide deposit in Nevada. Oxide's, of course, weathered rock near surface, has a lot of potential to be developed into a mine at some point, but it's also easier to explore, right?
Yeah, for sure. And it's a bit of an unusual situation that we've drilled to 500 meters depth and still haven't really come across even a transition zone. So it's very unique in that way, and of course allows for easier processing. This is not refractory material, which is often seen in Nevada with a lot of the exploration right now, where you need to find who's that major who has that facility. We don't have that concern. Our processing will be relatively straightforward. We're going to put out our phase 2 metallurgy fairly shortly, and that's going to be in line with the phase 1 metallurgy. But with the oxide nature, you can heap leach it. I think our grade's far too high to be just a heap leach, and so we're going to have a mill as well. So it'll be a mill, heap leach, but all oxide, and it shows very strong recovery. So certainly helps the story. And with the other areas that we're exploring right now, near surface oxide as well.
Yeah, great. And I think this story really has two legs to stand on right now. You have on the one side a resource you recently announced, which is what my question is going to be really about. And then second, exploration potential, which we'll talk about later on in this video. Let's first zoom into that resource you've announced. Perhaps you can take us through what really is part of this, and how many ounces in the ground are we talking about, and what type of grades are we talking about?
Yeah, for sure. So, we've been putting out fairly consistent high-grade intervals through our phase 1 and phase 2 program. So we started out with about a 600,000 ounce resource that was both inferred and M&I, but there were really only 75 holes into that. It wasn't the highest quality resource, so a lot of the drilling that was done was on infilling that area and really building out the understanding of the geology. What is the system that we're working with here? And because there's such high grade intervals there, a lot of that is identifying where are the faults within the system. And when you can identify the faults, that's where you find the highest grades. And so we did a lot of drilling within that resource area to really understand what was happening there. So the result of that is you have over 90% of the ounces in an M&I category. And obviously that leads to a very high confidence resource. And we're really happy to be able to, more than double the M&I ounces. We're at, 1.02 million ounces now, just in the M&I, 1.1 million ounces overall. But yeah, to have 90% of that in the M&I category is pretty remarkable. And we're really happy to be able to maintain that grade well over 1 gram per ton. And for oxides in Nevada, that's considered remarkably high grade. The other thing I'd mention, though, is that there's a really high-grade core here. So as you can see in the slide you pulled up, you've got over 50% of the ounces and just 15% of the tons. So it means it's a robust resource. At lower gold price assumptions, you're going to not lose a lot of ounces there. And you can kind of see at a 2 gram per ton cutoff grade, the resource holds up very well with still over 500,000 ounces of just gold. So we're really happy. The resource was done at 2,200 gold. Obviously, we're in a far higher metal price environment. But as you increase the cutoff grade, i.e. lower the gold assumption, the gold remains. As you take it up, more of that waste material, the low grade, will come into the resource, and you would stack that on potentially a heap leach pad.
Great, John. Thanks for that overview. And of course, in your release, you've also shared a table. It's quite detailed, this resource that we're talking about. You're already splitting it out across different categories, M&I, like you described, measured and indicated, of course, and you have inferred different categories of how well you can be confident of that the gold's actually there in the rock. But you've also split it out across heap leach potential and milling potential.
Absolutely, and that's important because obviously the recoveries are different. We do want to allow that level of granularity and disclosure to allow investors and analysts to model this out and see what are the project economics here. But we've got about 50-50 in terms of the tonnage reporting to the mill and reporting to the heap leach. Of course, the material that would report to a mill will be higher grade. That's about 1.75 grams per ton. And you've got about a 0.5 gram per ton reporting to the heap leach. That 0.5 gram per ton that reports to the heap leach, that's still a very strong grade for heap leach ounces in Nevada. So still shows very, very strong economics with that. But obviously, a lot of the economics are going to be driven from the mill. Now, there's a portion of this, though, which is there's a crossover cutoff grade in that you make a decision: is this too high grade to stack on a heap leach pad? And because you get higher recoveries from the mill, there's a decision to make, and that was reflected in the resource and the allocation of what tons are going to be reporting to the mill and to the heap leach. But ultimately, the takeaway is we have a lot of flexibility in terms of processing methods. If we're finding more high grade, we've got facilities to process that at the mill. If we're finding more low grade, we already have the facility. Well, we'll be building out a heap leach regardless with this resource, and so you can find that stack that low grade on the heap leach pad.
Great, John. Thanks for that overview as well. And something I was actually wondering about was you found some truly remarkable intercepts. I think that is not even a statement out there. Truly remarkable intercepts on your project in the past. Here we have 11.86 grams a ton of gold equivalent over 108 meters, which is of course truly outstanding. The question really is, out of these truly outstanding intervals, you've highlighted this high-grade core in your resource. How much of that is already incorporated? And how should we visualize that? Where is the pit on your project? What has been included and what has not?
So from this, from the drilling that we've done, all of phase 1 and phase 2 has been included. So these high grade intervals are included in the resource. And as I mentioned, because there's high grade feeder structures, we really wanted to pepper this area with a lot of drill holes to understand, where are the faults, because where those faults occur, that's where you get the highest grade. And so that drill hole you mentioned, that hole 44, which was 11.6 grams per ton, over 108 meters, drilled in October of 2023, that is drilling right through the guts of the fault. And then the mineralization kind of bleeds out into this limey siltstone. So even if you're stepping out, 20 meters from this high grade fault, you're still getting grades, between 1 to 3 grams per ton, 20 meters away over, 100-meter intervals. So it's really important to identify these high-grade feeder structures. And, as it bleeds out and you step out from that, you're still getting, very strong economic grades. I think one important thing, too, as you can see on this map, is that the high grades aren't concentrated in one area necessarily. They are peppered throughout the resource district. So now that we have a good understanding of how the faulting works and where the high-grade structures exist within the Atlanta resource zone, we're going to apply this understanding of the geological system to other areas on the property. And that's what we're going through right now with the Phase 3. But to answer your question succinctly, it's just Phase 1 and Phase 2 that's been included into the resource, and all the drilling from Phase 3 hasn't been included yet.
Perfect. Perhaps we can also place this resource into a bit of context. Of course, 1 million ounces is already quite a bit. Could be economical to develop a mine on as we speak. So where is that currently standing within the US if you compare it within the world globally perhaps as well? How is this resource currently ranking?
So yeah, there's not a lot of high-grade oxide deposits in the US. And so, we ran a screen pulling from S&P Cap IQ, the highest grade oxide projects in the US over 1 million ounces. And ours currently ranks second. The one above it, they're focused on rare earth elements, and that project's in California. So another interesting aspect is that ours is in Nevada. The permitting's a little bit easier. You see a lot of the projects on this slide are in Idaho, Utah, Oregon, areas that are, maybe a little bit more challenging for permitting. So in terms of bringing it all together, in terms of ounces that could ultimately come out of the ground and processed, to have the grades that we do in Nevada, on patented land, just only involving BLM, I think that we're very well positioned to advance this project forward, and obviously the high grade drives some strong economics.
And you mentioned something important there, I think, John, we should tap in onto is patented land. Perhaps you can explain really what it entails and also the complications or at least the benefits of that for an eventual permitting process.
Yeah, so the resource area is on patented land, which is effectively private ground. We have another area on the property, Silver Park, which is also has some past production. So, where the resource zone is, that's near a historic pit where there used to be mining from 1975 to 1985, and that existed on patented private land. Silver Park is a prime exploration target for us. That also has some past production and exists on private patented land. The rest of the area involves the Bureau of Land Management, BLM, and it's nice for us to only work with one key permitting agency, being the BLM. Sometimes, if you have another project and you've got running water at surface, for example, you might have U.S. Army Corps of Engineers involved. We're also fortunate we have done, significant biological and archaeological studies. Haven't found any, arrowheads or sage grouse at this point. So it does lead to a relatively straightforward permitting. Now, permitting projects in the U.S. and North America generally, it's not easy, but, I would view this project as easy as it can get to permit in the U.S., just benefiting from that private patented land, benefiting from the past production and the disturbed site already, and having a strong relationship with the BLM office, which the team at site does.
Great. Thank you, John. As I mentioned earlier on in this interview, I believe Nevada King Gold really has two main arrows through which it can drive value. One is that current resource in place, the other one is exploration or next steps from here on out. So perhaps you can take us along. I believe on the presentation you mentioned Round Mountain, an analogy in the area, which is of course a truly outstanding world-class mine and scale. Perhaps you can take us along really how that analogy goes, and also what the next steps could be for Nevada King Gold exploring this Atlanta project. Absolutely,
yeah. Well, I'll explain this simply because I'm not a geologist, so I understand it in simple terms, and probably to the benefit of the audience as well. For those geologists watching, you can have a more comprehensive understanding of the caldera system, and that's what we're working with here. Is a caldera system, and what a caldera is really a volcano that's collapsed in itself. So you can understand that there's a lot of obviously molten lava that was around that, and that's kind of created this caldera, which is kind of the collapsed volcano, and that's where our mineralization sits, and that's the exact same setting for Round Mountain as well, which is also the closest major operation to us. At Round Mountain, they've discovered almost 25 million ounces so far. That's produced and in the current resource. So we're at 1 million ounces right now, but obviously, with Round Mountain, when it went into production, they didn't know that they had 25 million ounces there. But once you get to that critical mass to put yourself into production, plenty of exploration opportunities. And, in the area that we sit in, there's been more caldera activity, more collapsed volcanoes than any other area in the world. So it really does lead to the potential to find these elephant-sized deposits where we are. And we're currently looking on the perimeter of one of the calderas, the Atlanta caldera, but there's a lot more of that particular caldera to explore, and there's other calderas on our property as well. So really the mineralization sits along that periphery of the Atlanta caldera, but there is the Ryan Springs caldera, and the Silver Park exploration target sits between those two areas. So very prospective ground for us to be exploring right now.
Great. And phase 3 exploration has kicked off, I believe, in April 2025. You already started hinting at some of the targets that you're currently looking at. But perhaps you could take us along. What is the vision behind this exploration program? What is the thesis that you're testing? And then what is the potential there?
Yeah, so we're in the midst of the phase 3 exploration program right now. We recently increased that to 30,000 meters from 20,000 meters. We're currently about 23,000 meters into it, so about 7,000 meters left to go. I mean, that said, we're fully funded. We got about 10 million bucks Canadian in the bank, so we can continue to explore well through year end here. So, just a bit of nomenclature to call it a phase 3 program, but we will continue to explore, particularly given the success that we've been having so far. One thing we wanted to do is, there's a lot of targets peppered all across our property. It's 120 kilometers square, the property that we hold. But we really wanted to distill it down to 3 main areas there. Here you can see, there's 15 different targets that we've named, but we do want to keep the story relatively straightforward, keep our exploration relatively focused here on these key areas, that being Atlanta North and Atlanta South, which run along that main fault structure there. You can see on the right side of the screen there. And then we also have Silver Park. Silver Park is an area where we've had past production before, like I mentioned. And so far, it's early days in our phase 3 program. This is very regional greenfield exploration. But, so far we've encountered gold mineralization at Silver Park, at Atlanta South, and at Atlanta North. So it really does lead to the potential for satellite operations here. With Atlanta North and Atlanta South, it runs along that key fault structure. So we're excited with that potential. Atlanta North is a little bit earlier stage. Atlanta South, that's a 2.5 kilometer long strike length. So, a lot for us to explore there. And in Silver Park, a very sizable area. I mean, the resource area could fit multiple times within each of these target areas. So far we're having success and really excited. I mean, given how scarce gold is, to have mineralization in these 3 areas so far, it really leads to the idea that wherever we're kind of poking holes in, we're finding some gold. The key is to hone in on those higher grade, economic zones. And so far so good. We're really excited. I was just down at site with the team and with a number of investors and analysts. And everyone's just very excited. Was down at the sites, the Atlanta South, Silver Park, and Atlanta North, and visited each of those sites, and just very prospective. And so we're excited with the phase 3 program. We'll be continuing to put out those drill results going forward.
Yeah, great. And looking at this graph, 2 different systems, it looks like. What are you seeing on the rock, the mineralization? Do you think this is all part of one larger system on your project, or are you looking at this as potentially 2 separate systems?
So that's a great question, and the drilling that we've done in Silver Park led to a really interesting conclusion where initially when we were drilling to the west, we had a target previously called the Wild West Zone. That was getting a little bit deep. We're drilling about 500 meters down. So it was looking more like an underground target as we proceeded west. What we found is that when we drilled at Silver Park, it looks like that same mineralizing event, that same fluid has really presented itself at Silver Park much closer to surface. So it feels like we had a steeply dipping structure, and then it started to come up towards surface, towards Silver Park. So that's exciting for us because we do want this to remain an open pit story. In Silver Park, the mineralization is close to surface. The drill hole that we released of 1.1 grams per ton gold equivalent over 25 meters, that's just 18 meters deep. So very exciting for us, and has the exact same geochemical signatures as the Atlanta resource zone. So, the team at site, the geologists, believe that this is the exact same mineralizing event. And right now the process is honing in on those higher grade structures like we have at the Atlanta resource zone.
Of course, and I understand you want to keep it to an oxide, shallow, open pit story for now. Just talking blue sky potential here. How is this analogy with that 25 million ounce deposit near you? Is that mostly oxides as well, shallow, or have they discovered also a deeper going ore body that might be carrying even more gold?
With Round Mountain, it is still a primarily oxide operation there. They've got a heap leach and they've got a mill at site, so some similarities. They are going deeper though right now, and so they've got a phase X proceeding. So there's just been a number of different iterations of development and a lot of zones discovered that really kind of push from that initial discovery that was made. So they can continue to go at depth, and right now, they are looking at operating for as long as they have and having discovered as many million ounces as they have. They are looking to go underground, and they're finding very high grades there, which will be put through a mill. They also have kind of the shallower satellite deposits at that target as well at Round Mountain, and we see the potential for the same at our project. Like I mentioned, Wild West Zone was steeply dipping and is getting a little bit too deep, but at some point down the road, there's certainly some underground potential for those high grades to be extracted. There's also, so far we're more focused on identifying the satellite deposits, which are closer to surface, less expensive for us to explore, less expensive for us to develop as well. And so far, so good with, like I said, we found gold mineralization in 3 distinct areas right now. And with the next phase of drilling, we want to be honing in on the most prospective of those.
It is a very exciting exploration future, that's for sure. Perhaps you can lastly shortly take us along on what the multiple jewelry boxes that you already have found at Atlanta. It's a modeling name that you've used, of course. You've already talked a bit about this, but perhaps you can take us along what has already been found and what could be the potential of these multiple higher grade pockets.
Sure, yeah. So we found, there was that phenomenal hole which really kind of drew me to the story, hole 44, which was 11.6 grams per ton over 108 meters, and that was the best hole that we've drilled. There's also some that were drilled further south. You can see the southernmost hole there. We're still getting 6.3 grams per ton over 55 meters. And what was interesting about this hole is that it's in a distinct rock type. So this was in an intrusive rock, and that really opened up the potential to find gold in intrusive bodies around the property. And so we've done some CSAMT work, which is geophysics, which looks at these intrusive bodies, looks at the highly resistive and less resistive rocks, and shows where you can have an intrusive body coming up. And so we're now, been testing out different intrusive zones as well. So it's been exciting to find, high grades in different rock types and in different areas along the property. You can see some of the holes here on this slide are at the bottom of the pit, and obviously the pit was mined historically in a much lower gold price environment. So yeah, you'd expect to find the high grade jewelry boxes at depth below the pit there, but we're excited to find that these jewelry boxes exist along the fault zone, and typically you see them where north, south, east, west faults intersect. That's where you find the highest grade zones, and on this map you can kind of see that's where these occur.
Yeah, normally 100 gram meters, which is a metric of the amount of grams you have times the intercept, the thickness of your intercept, is considered really outstanding already. And here you're talking about a hole casually that's 6.3 times 55 is in the 300 to 400 gram meter range. It's truly outstanding. I would like to zoom out a bit. Oh, sorry, go ahead.
I was just going to add, so now that we know that it's these these fault structures, and where they cross we get the highest grades, we're applying that learning to our regional exploration. So we're looking for the cross-cutting structures in Atlanta North, in Atlanta South, and Silver Park, and hoping to find similar grades in those areas.
Yeah, and of course, if you're able to find those, that could be truly outstanding for a potential development scenario. Those are the truly economic rocks. I would like to take you to this chart where you describe your price to NAV, net asset value, currently around the below 0.10 mark. And perhaps we can talk about, I think we have a clear picture of what the value is with your 1.1 million ounce resource currently in place. I also think we have a clear understanding of what the exploration potential is, but some of the options available to you to try to increase this P to NAV ratio over time.
Yeah, so you know what, I was very reluctant to put in this slide. You know, you see it, all the juniors do it. Oh, we're undervalued. But after the drop in the share price after the resource update, you know, just had to put this slide in. It's just getting a little bit silly and really not based on fundamentals. So, you know, the trading activity that we saw after the resource update, you know, that from what I understand, in communication with certain retail holders that were selling, it was more emotionally driven, and I don't think was based on fundamentals. So as a result here, yeah, we trade at an incredibly discounted PNAV. These numbers are from Desjardins, which is a group that covers us in Toronto. And on an EV per ounce basis as well, we view ourselves as undervalued. You would think, you know, not all ounces are created equal, right? Like if it's going to cost you a lot to extract 1 ounce of gold, it should be trading below average. You know, if it's refractory, for example, if there's significant capex required to extract those ounces, given we have, you know, an oxide deposit with fairly simple processing in Nevada with good permitting, you know, I would argue that these ounces should be trading at a significant premium to that peer group. And again, when you model out the project on a PNAV basis, you know, I would think that we should be trading at a higher valuation. Now, we're not just going to sit back and hope that we eventually will re-rate. I do think that the stock will bounce back. But, you know, we are going forward. And as we make other discoveries on the property, you know, I think we're going to be, you know, investors are going to be compelled to bid up the share price. And like I said, we're in the midst of the phase 3 drill program. If we can show a satellite deposit, then I think that you'll see some re-rate in the stock. Additionally, you know, the resource zone does remain open along strike, and you know, that's shown with our exploration targets to the north and to the south. So as we're putting out more drill results, I expect the stock will be re-rating. We do have a backlog of assays to put out to the market, and we'll be looking to do that shortly. But yeah, really, I think that the sell-off on the back of the resource was not based on fundamentals. You know, the conversations that I had with institutional investors and with analysts have all been positive, and you know, what we put out was relatively in line, I think, with the expectations from the institutional investor community. When I was an analyst covering this stock, you know, I'd model all of the drill assays that were released, and you know, came out with a number, a back of the envelope calculation that was relatively in line with what we delivered. Of course, you see the high grade intervals come out, and that drives the above average oxide grade. But there is low grade material in there as well, which is going to be stacked on the heap leach pad, and so you know, that factors in as well. But overall, the economics, we haven't put out a PEA yet. But internally, from what we can see, it looks like strong economics. And I think as we continue to put out strong drill results, as we continue to market the story and tell investors about what we have, I think you're going to see, you know, these valuations correct themselves going forward.
Yeah, thanks for taking us along on really the rationale of this sell-off. It's quite mind-boggling when you put out a resource like this, 1.1 million ounces. When you recently raised capital, $11.5 million at 25 cents with really strong insider participation. Colin Kettle, of course, your CEO, participated for $5.5 million himself. It's kind of mind-boggling that the stock is trading where it's currently at $60 million market cap.
Yeah, it is, and you know, it's been a bit frustrating, I would say, just seeing the reaction, just knowing kind of the work that went into putting this resource together and kind of everything that's happening behind the scenes. But you know, we are lucky. We did do that financing at 25 cents, and I remember at the time thinking, oh man, 25 cents, that is that's a low valuation. And it was because, you know, we had Franklin Templeton come in, a very high quality, one of the largest fund managers in the US, come in, want to participate. We said, okay, we'll do it at 25 cents. In retrospect, you know, thank goodness we did. So we're not beholden to do a financing anytime soon, and we're cashed up and can continue to explore, luckily. So don't like the share price where it's at, but we're lucky in that we don't have to tap the equity markets anytime soon at these valuations.
Yeah, you already started highlighting my follow-up question, really, how far this cash would take you. Are you able to put a rough number on that? Will it take you to end of the year, roughly speaking?
Yeah, this will absolutely take us through to year end. We have flexibility as well. If we're having success with drilling, we can increase our rate of drilling. The other thing to factor in, though, is that the pace of assays that are coming back. And so it's about a 45-day assay turnaround time. So as we drill a hole, we'll send that to the assay lab, but we don't want to follow up until we know what kind of grades there are in that drill hole, because we'll factor that into our next drill plan. With the plan for modification, which will be coming out probably in the next couple of weeks, you'll see kind of the areas that were permitted to be drilling, and those are peppered around Silver Park, Atlanta South, and some in Atlanta North. And just the way we go about it, very methodically and through an iterative process, we'll drill one hole, we'll interpret that data, and then we'll proceed. And if we're seeing if we like what we see, we're going to continue to drill that. But it really does kind of moderate the pace, and we're not just going to try to blow the budget and drill everything that we can as quickly as we can. We want to do this methodically, and with the cash budget that we have, try to build as many ounces as we possibly can through this budget and through the phase 3 program here.
I appreciate that, trying to get the most bang for your buck. Perhaps you can also take us along your current cap table, how that's currently looking like, who's currently invested, and how that's divided.
Yeah, absolutely. And you've seen some changes here over the last 8 months or so. We were previously a very strongly retail-owned name and still are at over 50%, but the institutional ownership is what has changed. About 8 months ago, that was at about 2%. We're now actually north of 11%, probably closer to 13% with some of these groups that have been adding to their position in the market. So it's really changed quite dramatically. A bit odd to see kind of the share price sell off as institutions are coming in. But it's with our liquidity, it's hard for institutional investors to establish that large original position in the market, and so that's often done through a financing, and then they can top up their position in the market. So we're fortunate to see we just have kind of 4 of our larger institutions listed here, but there are others, and it's been great to hear messages that they've been buying in the market. I as well, after the sell-off, added to my position and dipped into the market. So it is a well-aligned management team. Institutional investors understand what we're doing, and we really appreciate the support from all of our shareholders and those who have been buying in the market here.
Is that, you think, a general trend that will continue? More institutions? Is that something that you're looking to add on?
Absolutely. I mean, that's kind of my background is from the institutional world as an equity research analyst, have some relationships there. So want to continue to add to our institutional shareholder roster. And I think that's going to be very supportive for the share price when we can establish initial positions through financings, but then see these groups top up. As we move forward, I think you're going to see that institutional investor percentage continue to rise. So that's a key for us. I think it'll lead to a more steady trading level, and I don't think you're going to see these kind of exaggerated moves like we saw down. I think that it's easier to communicate the messaging to an institutional investor base, and I think that you're going to be able to manage the expectations a little bit better going forward, because when you're so highly retail held, sometimes it can be challenging to get that communication across, and so I appreciate this opportunity to get our messaging across and what we're trying to do here to a broader retail audience. Now the retail investor group, there's a lot of high net worth individuals in that group, and certainly appreciate the support that's been given to the company over the years, and that's a key area for us, and we're going to continue to focus on both institutional holders. Flying down to New York shortly, tomorrow actually, for some marketing meetings there, and then in July got a retail focused conference as well, so trying to address the retail audience and just be better about that as well going forward.
John, last main question from my side, really. putting all the pieces together, talking catalyst over the next couple of months, what should an investor expect? What is the exciting news flow to look out for?
Yeah, so we've got a nice backlog here of news flow. I think we're very well positioned. We got kind of that starter over 1 million ounces at very strong grades. And then really, the key messaging we wanted to come through was that's really just a status update. We just wanted to show investors who have participated in our financings before, we wanted to just show kind of a report card. Here's what we've done, and here's what we have to show for it. We're now, we increased M&I by 122%. We've got a really good starting project here, but it is important to note that it is just a start and that we're continuing to explore. So we've got a backlog of assays, so we'll be getting those results out. We also have phase 2 metallurgy work, which is going to show the same processing methods that were shown in phase 1, so not a significant departure. And really, those are going to be 2 key catalysts going forward. And really, it's going to be focused on drilling. It's a drill bit right now that drives this exploration story. And having just spent some time at site with the geological team there, they're more excited than ever. So you've got this kind of unique circumstance here where you've got gold near all-time highs. You've got an updated resource, so you've got the project more advanced than it's ever been. You've got more targets to explore than you've ever had, yet our stock's at an all-time low. So something's got to give here, and really excited with the setup for investors who don't have positions yet. There's a great time to get in, and I do expect with our news flow and catalyst to come that will correct itself.
John Sclodnick, thank you so much for swinging by today. Really appreciate all the insights and your time.
I appreciate you having me on site and really appreciate that. That was great.